Hey, good afternoon, everyone. Thanks so much for giving me your time this afternoon. This is Mark from Right Line Trading, and this is going to be a little bit of a different kind of seminar because I'm going to give it pretty much all off the charts. Not going to use the sides for pretty much anything. I want you to see our optimized system. I think it's really going to wow you, quite frankly, and I'll show you some trades from today. Unfortunately, I have to start with this disclaimer that all signals and trading opportunities provided both orally, written, or electronically are for educational demonstration purposes only. We take no responsibility for any participation by visitors or subscribers within the futures or forex markets for any profits or losses that may be incurred. We are not certified commodity trading advisors. We recommend that you talk to your broker before making any trades and never risk more than 2% of your account on any individual trade. With that said, I'm going to take the slides down. We're going to go to the charts, and I'm going to one by one show you how we've changed the charts, modified them, and really provided a real optimized system. Now, let me just say, in terms of philosophy, that market environments are always changing, and one piece of software, no matter how good when it first is developed, is never going to last as market environments change. And the market environment in the last couple of months has really changed significantly. And I'm going to show you a little bit how that's happened. And in order to flex, we've had to change our system to meet the demands of this new environment. I mean, for one thing, and although today there were great trades on the E-mini, now we have not optimized this chart yet. There was this long trade right here for 9 points, and this long trade right here for 4 points. In general, E-mini volatility has really dropped off significantly. Now, this was last night, but during the trading day, the average true range of the financial instrument has just been very, very low. Now, yesterday's volume was only 450,000 shares, at least through noon. So there's been low volatility and relatively low volume. And we rely on the E-mini, the Nasdaq, the Russell, and the Dow to power some of our indicators on our charts in order to get an idea of when to take the best trade. So what we had to do is we had to alter some of our indicators. And I want to go through some of them briefly. But today was a great day. I'll just show you really quickly. And I want to really spend the time on the charts. But I'm sure there's some traders who've never seen the system. You can see you have 3 green lines here down below. The candle's outlined in blue. You have dual dots above the candle. That's an entry. See the triangle? It's a long trade for 4 points. This is a re-entry on a pullback and continuation. Same thing. Here you have 2 green lines. That's all you need. Green background, dual dots, and up you go again. And this is for 9 points. After that, just really no good trade. This was a potential short trade right here. Only obviously we're out of the market at this point right now. And this would have also been a winner on this critical middle correlative market setup. And I'll just quickly show you the Dow, which was really today a killer of a market. Now, here's the YM. This is not our optimized system, but here, perfect entry long. Now this is a 4-unit Renko. This is a very, very big move up. This is another trade long, all the way up. I mean, these are very big moves. You see the background bias is green. And I'm going to go over, that's 58 ticks. This is a smaller move and then another gigantic move. 4 huge trades on the Dow today. And this one I think might have been the colossal trade. I don't know. This one's 53. So big trades on the Dow. All of them system generated entries. There's the triangle. Here, actually, the triangle's right here. Well, this was a little bit riskier at 954. Here's your system generated entry, the triangle up, system generated entry, oscillator signal up. So all of them are taken right off the software. You really don't have to do a whole lot of thinking, although you really have to do your due diligence on the trades just to make sure they're perfect. But you can see these were just perfect trades. So let me show you the changes that we've made in the system and give you a quick explanation of what the software does and how it captures a trade. And really, I think the most important thing to talk about is not how it gets winners, because it's going to get a lot of them, but also how it avoids losers, because that's always the real challenge in day trading. It's not so much getting the winners, but it's being able to avoid losers. So we'll look at the Nasdaq. Now, the Nasdaq had killer trades today. Right here. Nothing here. I'm going to go over why. That's a risky trade, not a good trade. Here's your trade right here. That's your second trade. Here's your first. Perfect trade. Perfect trade. Perfect trade. Can't take this trade. This is right into the VWAP, the volume weighted average price, right into support. And the VWAP turns price right back up. And you really don't have a short entry here. So let me go into all the different indicators, what we look for, and then I'll answer any questions that you have. And a lot of you who've seen the system before will notice that it's different. Now, the first thing that we've done is we have changed our 50. And we've always had this 50. And what we've done is I've taken into consideration the fact that there's 2 kinds of price movement. One type of price movement is arithmetic. Arithmetic price movement is what you see with a tick chart, with a time chart, with a range chart. And that for every increment of time or every increment of unit price movement, or for every increment of tick number, whether it's a 377 tick, the candle's going to move so far. But with Renko, it's a little bit different. What happens is that it takes 25 ticks to create a reversal candle from here to here, but it only takes, on this chart, 4 ticks to create a new candle to the upside. So in the 25 ticks it takes to move a candle, to create a reversal candle, you're going to get 6 up candles and 1 additional tick. So this doesn't move arithmetically, it moves geometrically. When Renko starts to move, it moves like wildfire. I mean, really fast. And in order to capture a move like that, what we always had was a 50-period simple moving average, which was here, and it was too slow. So what we did was we didn't take an exponential and we didn't take a simple, because I didn't think that adequately described the way price moved, because price moves really fast. So what we took was an exponential of an exponential. So this is a 50-period exponential of a 50-period exponential. We took the exponential equation twice to create this unique. It's a 50-period, but it's a 50-period exponential of a 50-period exponential. So it moves fairly rapidly and really describes price great and creates a really awesome area of support and resistance. Now, we never had a faster moving average. So what we did was we did the same thing. We took a 15-period exponential of a 15-period exponential to create a new 50 and a new 15. And these give us just an enormously greater number of trades, where before we had no faster moving average. We could just trade off the 50. Now we can trade off the 50, or we call it a modified 15 or a modified 50. Now we can only trade long. It also gives us specificity. We only trade in the direction or on the side. If the 15's above the 50, we only go long. If the 15 is below the 50, we can only trade short. So right there, we get constraints that we have to abide by. 15 below the 50, mandatory short trade. 15 above the 50, you must trade long. So right there, that's brand new, because we never had this fast moving average. Now, we also sped up our background bias. Now, background bias, if you don't know what that is the multi-time frame assessment of the market you're trading. Now, this is a 4-unit Renko. This background is looking at the 6 and the 8-unit Renko and looking at the trend. And when the background is green, it means you have a triple time frame alignment, your trading chart and your 2 higher time frames. So this is the most opportune time to take a long. When it's blue, you also can only trade long, but it's a little bit of a weaker setup. I'm not going to go into each of the individual setups, but there are 3 up colors. There's the cyan color, there's the dark green color, and there's the light blue. All of them give you an absolute direction to trade. Only long, only long, only long. 15 above the 50, background bias. You know the direction you have to trade. And you see all these traders counter trend trading these candles. And what are they doing? They're trading oscillator divergence. They're trading MACD divergence. Maybe they're trading off of Fibonacci, off the trading chart. In any event, what they're doing is what is impossible to do. Now, I've been trading for 15 years. There is no way to call a top and no way to call a bottom. They're deciding the market's gone up as far as it's going to go, and based upon their trading analysis, they're going to take the market down. They get run right over. They're going to take the market down, and they're going to get run right over. And the only thing that's going to turn the market is when the institutional traders decide it's time for them to step in, put in big money, and turn. That's it. If you try to take it off of indicator analysis, you're going to really get taken. You're going to get beaten up. So our rules for counter trend trading are you never counter trend trade. It's just that simple. Now, another rule that we have that allows us to trade with specificity is when background is clear, it's white. It means there is no alignment of time. There's no trend alignment on our higher time frames. Now, we have a lot of independent variables. And the most important thing is the purpose of a piece of software is to provide you with an assessment of risk on entry. A software doesn't hand you a trade, it hands you a potential entry in which you need to understand the risk associated with taking the trade, which is exactly what our software does. It defines for you the amount of risk you're taking. Now, you may have a lot more risk tolerance than the next person. We have over 150 traders in the room. All of them are fairly conservative because the number one goal in day trading or swing trading is capital preservation. The worst thing to do is take a loss. You would be much better off to let a winner go past you than to latch on to a loser. So if there's any question in your mind about the trade, it's always better to let it go and take the real low-hanging fruit, the real perfect trades. They're never going to happen when background bias is clear, because one time frame is telling you to go long and the other longer time frame is telling you to go short. And when you're in that kind of scenario, you cannot predict with any degree of certainty how price is going to move on your trading chart. And of all the independent variables, we call them independent variables, you could call them indicators. Of all the indicator analysis, the single most important one is the color of the background. Because if you get an entry signal with no background color, it doesn't have much validity. And there's a mathematical theorem for the nonlinear relationship of independent variables. They don't all have to be equal in power, and they're usually not all equal in power. To give you an example, if somebody puts a plastic bag, this is a sort of a horrible example, but if somebody puts a plastic bag over your head, which is the most important independent variable? The increase in carbon dioxide in your blood or the decrease in oxygen? Which one kills you first? And the answer is, I don't have a clue. But the point is, one is more important than the other. They're both physiological variables that are going to determine how long you live, but one has far more weight than the other. And this background color has far more weight than anything else. So if you wait for this kind of setup here, where you get this change, this is where you're going to make all your money, right here. And this is what you have to do. And this you just have to trade with patience. Right here on this entry, this is a perfect entry. Whoops. Short. Because you're trading in the direction of your two higher time frames. And you know exactly where to exit the trade, right at the VWAP. Price hits it and bounces. Here's your perfect long trade. Background bias is blue, and up you go. When you trade in the direction of the multi-time frame trend, you're going to take the lowest risk, highest reward trades. Now, another thing that I think is really important that you really, I don't think is stressed enough is that on every single trade, we take 3 contracts. We trade with 3 contracts. And what we do is a candle's going to reverse on the 25th tick. So we take 75 ticks of risk if you want to trade 3 contracts. Now you want your reward to at least equal your risk. Now, if you take a trade in a significantly overbought market, you may get a first target, but you're not going to get a full winner. You want to take a trade, and I'm going to show you how we define overbought, oversold. So what you want to do is you want to be able to capture a move like this that goes 18 3/4 points. That's 8 times 4 is 32. That's 70. This is 75 ticks. So your reward on this trade, now you're not going to get the top, is close to your risk. And the reason that's so is because you're trading with this modified 15 close to the 50. What really defines overbought, oversold? And I know I'm going through a lot, and I'm sort of going through it as it hits me in the head. And I could go through this indicator by indicator, but I wanted to try to give you a gestalt about trading. I think all you do is hear about, well, this indicator does that, and this indicator does that, but how do you trade? And I don't think you get enough of that. So when the 15, this is a modified 15, a 15 exponential of a 15 exponential is close to the 50 of the 50, you're in an environment where you're very likely to get a long trade. Not guaranteed, obviously, but this is when you can have the highest probability of getting a nice runner. But when you get into the situation, now let me find one for you. Remember, since these are exponentials, as the space between the 50 and the 15 begins to increase, the risk associated with buying into an overbought market increases. And this morning, we had that problem on the Nasdaq. We got this great entry here, but then the market continued to run up, and you see a price peels off the 15. And when it peels off the 15 and the 15 is chasing away from the 50, I mean, I consider that to be an overbought situation. So you have to be very careful. You want to trade when the 50 and the 15 are pretty tight to each other. And we're going to define that, and that's going to be this line number right here. It's the moving average differential. Everything needs an objective assessment and a number, not just a gut feeling. And you want to trade directly off support. Now, I want to talk for a second about, this is the volume weighted average price. It's a very significant area of support and resistance. Be careful trading into it, and you can trade off of it. This is the open, and this is yesterday's close. Now, our pivots are different than almost any other pivots, because everybody else, or most other platforms, create pivots the easy way, and they don't follow appropriate Japanese candlestick dogma. And let me give you an example, real easy example to show you. Let me find a good one. Okay, here's a good example right here. This pivot is formed. First of all, it doesn't, a pivot, the easy way that pivot indicators work is they take the pivot off the price high right here. So you get a pivot here. And the reason is because it's an easy assessment to make. It doesn't take so much coding. and it's a lazy assessment. But the fact of the matter is, according to Japanese candlestick dogma, the only thing that's important on candlesticks is the candle body, and the buyers or the sellers that turn this market actually sit right at the top of the candle body. So this is an inaccurate assessment. This is the real assessment. And this is how our pivot indicator works. Then you see price comes right back up to it. It doesn't stop here. It stops here and gets pushed right back down. Price comes back up to it, gets halted, and gets pushed right back down. It doesn't come up to here. It stops here because this is really where the sellers are. Now it's been hit once, it's been hit twice. And every time a pivot gets hit, it weakens because the number of sellers that are hiding in that pivot start to diminish. And everybody talks about hidden buyers and hidden sellers, and they look at market profile, and we use market profile. We'll go into it in a minute. The best way to see where they are is just an old-fashioned pivot created in the right way. Now then price comes up again and hits it, and it's turned down. Finally, after one hit, two hits, three hits, it breaks on the fourth hit. So in addition, most pivots also do this the lazy way. Once price pokes above the pivot, it breaks. Well, that's an easy way to do it because it's an easy way to code. But that's not the way a pivot works. The way a real pivot works is you need a 2/3 candle close above the pivot for the pivot to break. So this candle body that pushes above it, you'll notice the pivot still traces because it assesses the size of the candle body. And if 2/3 of this candle body doesn't close above it, the pivot is still technically present and still acting as an area of resistance. Right here, it almost broke, but that was half and half. And so the pivot kept tracing. Here, it didn't even, it was what wasn't even an issue. I mean, price came up to here and then retreated. And you'll see on this candle, you still have the pivot. On this candle, you still have the pivot. Then finally, this is the candle that breaks the pivot, and you see it cuts off here. This is the 2/3 candle close above the pivot that really takes out all of the sellers here. And you see what happens when the pivot breaks. It snaps and the market runs. Now on the fourth hit of a pivot, that's a good shot at breaking the pivot. Even the third hit, the first and second hit of a pivot may very likely turn price. So if you really want to be conservative with your trades, you're going to avoid pivots. And for the most part, I try to. So you have to be very, very careful with them. This is a very tiny pivot. But price hit it once and came right back. The second time, it broke through right here. So I just wanted to give you the heads up about pivots. A pivot indicator is not a pivot indicator. And if you want to know where there really are hidden sellers and hidden buyers, you're being telegraphed that information right here by looking at these pivots. And here it is again. And it's going to happen over and over again. Price turns down, it comes up here and gets turned down. Now, if this pivot indicator just looked at price, it would break, but it's still there. And I don't know if this pivot was broken today. It's still there. because the Nasdaq just faded into the dust. But if you look here, and I don't want to belabor this point, here's your pivot. Price comes down, really, and hits it right here. This is how important it is. And goes up. Hits, goes up. Hits, goes up. Hits, and goes up. And then finally, it snaps. So if you took all these entries into these, now these aren't really valid entries anyway, but if they were and you tried to get through, you would have lost 4 trades in a row. And that's a kiss of death. So you have to really respect a real pivot. So I've talked to you about background bias and its importance. And I've talked to you about the importance of our fast moving average crossing our slow to the upside to take a long, and our fast crossing our slow to the downside to take a short. Since you want to put all the odds in your favor, this modified 50 and modified 15 should be green on a long, and they should be red and red on a short, because these are an assessment of momentum, longer term time frame momentum, and you want to trade in their direction. This is essentially putting as much of the odds in your favor on a trade as you can. Now I'm going to take off all the drawing information, and we're going to look at these dots. Well, let me just show you the entries. We have 3 entries. One is based on an oscillator. Now this oscillator, the only difference between this and any other oscillator is that a regular oscillator, in my opinion, which has a formula of X, moves too slow. Because remember, we're looking at geometric movement, not arithmetric movement with a unit Renko. So we took the regular formula and we took it to the second power. Of course, I can't hit it 2. So it's simply an exponential oscillator. Every time it crosses to the upside, the 50 to the upside, you get an up triangle. And every time it crosses the 50 to the downside, you get a down triangle. Now it's going to give you a lot of false signals. You have to vet them, but it creates tremendously advantageous trading opportunities if everything else works. And it's because it's an optimized setting. And if you'll notice right here, it calls the beginning of the short trade. And you can't get into it. Your entry is right here on the continuation. Unfortunately, you can't get in at the beginning of this move. This is when the Fed announced it was going to increase interest rates by 25 basis points. The Nasdaq just took a dive, and you just had to wait to get in here. And you couldn't get in on an oscillator signal, although the oscillator entry is lower risk. You don't absolutely need one to enter a trade. Let me show you some. Now this is a revolutions indicator right here. We've got 2 of them in a row. Now we're working on these. These are going to look at every single variable I told you about, every single indicator. And when everything is perfect, these are going to fire. Right now, they look at about 80% of the things that are perfect. So you still have to vet these entries and make sure that you like everything else on the chart. But they give you terrific entries. Now, about 75 to 80% of them work. And when we're done, we want to push that a lot higher. Because right now, this doesn't look at 100% of what you need for a trade. The other entry besides the oscillator triangle is this entry. It's called our continuation signal. Now I'm going to show you the inside of this signal. This is a multi-time frame signal that looks at price action and market structure on this pullback candle and gives you an assessment of the probability of continuation of the next up candle. Now, if it was just assessing price on your trading chart, it would have no ability to tell you where price was going to move. None. What it does is, on some of these indicators, and I'm not going to hide anything from you, the continuation is looking at a range chart, and it's looking at two range charts. Now, range and Renko are very similar. The only thing that determines when you get a new range candle is how much the market moves. The only thing that determines when you get a new Renko candle is how much the market moves. So to optimize them, you have to find the right range charts that give you that perfect symmetry to allow you to get a multi-time frame alignment and continuation on this signal off of a different kind of chart. Now, this should be a 13. Because what we do is we look at an 8 range, which is a fib number. And although fibs, I don't believe, describe price movement, they do have symmetry. And it should be a 13. But when we look to optimize it, we sped up that second chart to an 11. So it's looking at the 8 range and 11 range chart, and it's making an assessment of how price looks. And you don't get many of these. But when you get them, you know that you're getting a multi-time frame signal that's telling you price is going to continue. And I can show you a few of them. Now, here's a short trade. Now, it comes without background. No, I'm sorry. I thought I saw one there, but there isn't one there. Let me find another one. You're not going to see many because it requires a lot of alignment here's your hit right here. You see it's kind of overlying the triangle. It looks at this pullback and makes an assessment of the likelihood of a successful continuation. Now, it comes with an oscillator signal, and the offset's a little bit off because it's kind of obliterated. You can see the triangle popping through the top. And there's an awesome Nasdaq trade. So we all need help trading. Now, there's another oscillator signal, and this is just to give us help. But you also need to understand the system, and I call it vet. You have to make sure that the trade. See right here? Nope, there's no signal here. I thought there was. I'm getting a little punchy. Let me find another continuation signal. So far, we have not found a losing continuation. Now, see, here's a losing revolutions. And I told you, not all of them work. And we can talk about why this is a loser. Number one, the market's oversold. And number two, the candle has to come right off resistance. This candle wick is pulled way off. And it's not a trade. But let me look. Here's another one right here. Again, dual signal coming off of dual support. And up it goes. Very, very low risk, high reward entry on these signals. So you watch for them. And if you want to make an audible alert so you don't miss them, they come with a beep. Now, I don't have any beeps on because I have so many charts open on so many markets that if I kept listening to all these beeps, I'd go crazy. So I've turned all my beeps off. But if you just trade one market, and a lot of traders do, they just master one market and they trade it so successfully that they make really, really good money. And I'll just show you one more because I want to show you off of a chart, not off. When you see a webinar off of a bunch of slides, they can show you anything. And I'm not saying that they're disreputable. I'm just saying it depends on what they want to show you. And I'm showing you this is right off of a live chart. Now the DAX is an incredibly good instrument to trade. The problem with the DAX is you have to trade it at 3 o'clock in the morning. And if you talk about moving like lightning, this chart moves at light speed. I mean, I took a trade on it a few days ago and I got 6 ticks of slippage. And it gave me such a bellyache because our first target is 6 ticks. So it went 9 and we took a loser. And that was because I was trading it at about 10 o'clock in the morning. You just can't trade it during a period of time when it's got low volume. You have to trade it at 3 a.m. Eastern. And if you're in Europe, because we have a lot of traders who trade in Australia, they trade in Singapore, they trade in London. They will trade the DAX, and the DAX gives you. Now we haven't yet optimized it. This is the old 50. Oh, this is our new 50, our new 15. We haven't modified the quants. I'm going to talk about that in a minute. Here's the great trade, and this is a tremendous continuation trade. Now, and this is another. Now these are oversold, so they're difficult to take. I would not take this trade. I would have taken these two. Each of these ticks is 12.5 euros. If you get a full winner, the way we have our automatic trade management strategy, you make 350 euros. That's $410 on one trade. And all you need is 15 ticks. This trade went 25 ticks. This is telling you it went 12.5 points. And each point is 2 ticks. This is a gigantic move. 350 euros. So you could have been done at 3:24 in the morning with 700 euros, which is probably close to $800 when your broker converts it. So the DAX is just a terrific market, but you got to trade the European session, and it gives you great entries. I just want you to be aware of it. I mean, I think it's a hidden night jewel if you happen to be in a position to get up late at night, or you live in an area where when you get up at 3 o'clock in the morning Eastern, it's daytime for you or it's early morning for you. Now let me talk about the quant lines. Now, we had a series. Now our quant lines, which are right here, are simply a series of correlative markets. Now, you know what happens in the course of a day. Now I want you to know is one thing right off the bat. No indicator analysis that we use to enter a trade or to track price action, except for the oscillator, looks at price on our trading chart. It either looks at 2 higher time frames or it looks at other markets. So why don't I talk about the dots first? What are the dots? These dots, I think they're kind of clever. What they are is they're tracking the direction on a very fast dual moving average. This is the fast line, and this is the slow line. And what are they looking at? The dual direction of the Russell and the E-mini. Now, don't you want to take a long trade on the Nasdaq when the Russell and the E-mini are also moving long? It doesn't mean that sometimes the Nasdaq won't make a big move long without the Russell and the E-mini. And those are going to be trades you're going to leave behind. You're not going to get every successful trade. But if you try to take a trade long where the Nasdaq and E-mini are not moving with you, the likelihood of walking into a loser becomes that much greater. So what you want to do is optimally on an entry, get a dual dot confirmation. The X's are the fast, the circles are the slow. If you've got the oscillator, the continuation, and the dual dots, you're moving not only in the multi-time frame direction of the Nasdaq, you're moving in the multi-time frame direction of the E-mini and the Russell. All of this is tilted to get your trade to its first target and then optimally get yourself a runner. It's all we're looking for. So let's trade in the direction of these markets. And when they all line up, we're very, very likely to get a nice winner. Now the quant lines do a similar job that the dots do, only do the analysis completely differently. And instead of looking at 2 markets, they look at 9. Now, first of all, let's just look. We're going to split off the bottom 2 from the top line. Now remember, we're trying to put everything we can in your favor on getting a trade, because the market itself stacks everything against us. We've got the institutional traders, we've got slippage, we've got so much stuff that the market can throw at us that we really, really need to get a tremendous advantage to become successful traders, consistent winners. Now the top line, let me just get rid of that. The top line is the assessment of the cash markets. And it is a, you don't have to have it. I mean, the word that I'm looking for has escaped me, but it's not mandatory because it requires a $60 additional data feed from Kinetic. Because what this line does, it plots the difference in stocks on the Nasdaq that are upticking versus stocks that are downticking, with stocks that are moving on up volume versus stocks that are moving on down volume. Because I can't spell. Now, optimally, when the internal cash markets are rising, there's more stocks upticking than downticking, and stocks are moving on a preponderance of up volume rather than down volume. This upper line is going to go green, which tells you that the cash markets are very likely to go up. And this is the only system that leverages the direction of the cash markets when you're trading the futures. Now, I'm not going to go over trading stocks, but this has tremendous power in trading the Qs and in trading the SPY, the SPY, when you stay in the direction of these cash internals. But we have one for the Dow, we have one for the Nasdaq, we have one for the Russell, and we have one for the E-mini. But this is voluntary, because you can still trade really well without it. And you do need to pay $60 to Kinetic to get the data as a second data feed to power it. And if you don't want to use it, all you have to do is go into the indicators and go to quants here and go to line 4 and make it transparent, and it'll disappear. So it won't get in your way. It won't be some awkwardly ridiculous color. It'll just disappear from the chart. Now the second, third, and fourth lines are all futures markets, and they're correlative markets. Now, when all 4 lines are green, just to make it easier, we made this dashed line above, which if you find annoying, you can also make transparent. I've had some people tell me, the chart's too busy. I don't want to see that. So make it transparent. You don't need it. It's not mandatory. But if you want to see when every line is green, you can just look up top here on the dash line. That's all. And when you get all 4 lines green or red, if you get an entry, like right here is an entry on this wick back in. Now, the candle halo we'll talk about in a minute is not accurate once you close and open your chart because it's a fractal indicator. I mean, this is a gimme long trade on 4 green lines. Whoops. I'm not going to even try. It's a perfect trade. I'm not going to try. So let's look at the lower lines, and I want to talk about those. What we did was our quant lines were failing. And the reason they were failing was because the E-mini had lost all its volatility. The Russell was not moving. And the Dow, for the most part, was also kind of like laying there like a dead flounder. And those markets used to be in this line. And this line was just not turning. And it was just a real problem for us. Now, I can't tell you every correlative market because it's taken us months and months. And in addition, the correlative markets change. The upper line are bonds and notes, and the lower line is honest to God markets we've looked, are currencies and an energy. Now, the reason these are so powerful is simply because of this. It's because of this fact. Again, we're not looking at price on our trading chart. We're looking at 9 other markets. And what we're doing is simply basing our analysis off a simple principle. And that is, in the course of a given day, the money in a market is fixed. All the institutional traders have X number of dollars, and they're just going to play with them. And you saw what happened when the Fed announced they're going to increase rates by 25 basis points. What did the institutional traders do? They fled from stocks. Not only did the Nasdaq fall, but so did the Dow, and so did the E-mini, and so did the Russell. So where does the money go? Now, I can't find the move down. It's got to go somewhere. And where it goes is it goes into safer investment vehicles. It goes into treasury bonds. It goes into treasury notes. It goes into precious metals. It goes into currencies. Yes, some goes to cash, but very, very little. Because these big institutions have to keep that money working because cash makes essentially no interest. Money that sits in cash simply decreases in value. I don't think the interest rate matches the inflation rate, especially with a 25 basis point increase. Keeping your money in cash is a loser. So they're going to rotate this to other asset classes. And that's all this is doing. Now, a lot of indicators tell you that they track the direction of money flow, but you can't directly. The institutions aren't telling you where they're putting their money. You have to do it indirectly. And this is our indirect assessment of money flow. Now, the middle line is mandatory. You cannot take a long trade without this middle line green. Now, you would like more lines. I personally, when I take a trade, I like to have the cash market with me, and I like to have at least this line, the upper, which I know are bonds and notes and another market, and at least one more down here. So all you've got to do is look at your entry and look at the color. Now, again, these are changed when you close and open the platform. It's unfortunate, but this is the truth. Now, right here, you still have your good trade. You don't have the key line, so you have to be careful. But the point is, do you have enough independent variables on this trade to take it short? And you do. You have the cash line, the first line, the third line. Eventually, your key line kicks in. You're trading right off resistance. You've got pink background bias. You've got this nice revolution signal. You've got an oscillator entry. Remember the dual dots? The Russell and Nasdaq. I'm sorry, the E-mini and the Russell are heading down with you on the trade. The likelihood of this blowing up is small. And so you've got a nice short trade. So taking that all into its totality, that's what we look for on trade. Now, the Russell was pretty bouncy today. And let me give you another example. And then I'm not going to answer questions, but there's just a couple of other things on the chart I want to show you. Where am I? Okay. I'll show you a trade a lot of people in the room talk that I didn't get. I just have to find it. Where was it? Okay, I'm on the wrong day. Let me go back to today. And it was right here. You look, every line is green. And what does the market do? It drops a wick right to support. Now, I missed this entry, but I go over everything in the room. A lot of people took the market long right here. That's a full winner. We need 30 ticks. I think it was a 28 tick move. If I remember, I scaled it before. Nope, 31 ticks. 7 times 4 is 28 and 3. It would have taken out our first target at 20 and second target at 30. So that's what you have to look for. And some of the most powerful entries occur when the bears try to pull the market down. They fail. They pull it down to support, and then the market closes up and it runs. And I'll show you one other formation, then I'll talk about the 3 line, which I look for all the time, and it really is very effective. Here's another example right here. The wick right through the VWAP. And up you go. Green background, dual dots, 4, well, you don't have the cash. You have 3 quants, that's plenty. Up you go. And this cash line turned yellow for 1 candle. And it shows it's making an independent assessment, because even though the market went straight up, this line turned yellow for a minute. So the cash blipped, but that's a perfect trade. So here's the last component, and it's the 3 line indicator. Now the 3 line, I have 2 carbonites and I've already renewed, and the other carbonite one. The 3 line indicator, which I'm not going to show you, looks at order flow, stochastic, and momentum. And it does it on a multi-time frame basis. And the reason we don't show it is because we reflect its results onto the candle. Now, what you can do with the candle is here's the 3 line, you can change the color of the down halo. I like it to be gold, and I like the up candle to be royal blue right here. But you can change it to any candle color you like. Also, using the data series, you can make it any thickness you want. I have it 3 and 3 right here. You can make it 5 and 5 if you want it thicker, or 1 and 1 if you want it thicker. It's up to you. But when the halo is yellow, our 3-line, order flow, stochastic, and momentum are all aligned to the downside. When it's blue, it's all aligned to the upside. And we want to take a trade entry when a short trade with a gold halo and a long trade with a blue halo, dual dots, the whole schlemiel, to make the trade a very low risk trade. Now, I just want to bring this to your attention. If this trade is going straight down, why would these two candles turn black? And the reason is that the indicator is making an assessment of oscillator divergence on higher time frames. And when you get oscillator divergence, it will take out that gold halo. And what it will say to you is, don't enter here. Don't enter here. But if I'm already in the trade, 90% of the time, divergence gets wiped out and it just goes right through. Divergence is so unreliable that I always ignore it if I'm in the trade. So I just want you to know, I want you to see if this is making a multi-time frame assessment of order flow, why would it go black if price keeps falling? That's the reason. Why would stochastic go black? Well, you got divergence. And I look at divergence on our chart all the time. And I'll tell you, it's just, sometimes it'll give you a great trade. And boy, when it blows up in your face, it really does. I just completely ignore it as a topping signal, as a bottoming signal, or as a problem on continuation. And I'll show you an example of it. When it works, it usually works big time. But when it fails, it usually fails big time too. And we were going to code divergence into this off the exponential oscillator, but it's such an unreliable signal that we decided it's not worth the effort because we're not going to take the signal. And let me find a great example of divergence. I'm just looking at the high. I got to get rid of that carbonite. I think it's going to do that forever until I take two trials of it. Okay, maybe this might be. Okay, here's divergence. Now this is divergence that works. Here's a higher high right here. I think you get it without me doing it perfectly here. And the oscillator creates a lower high. And there's divergence. We just don't trade it because more than likely you're going to get beaten up. But here's an example of it working. And if it was consistent, we'd code it. So what we're looking for is this long trade right here on green background, dual dots. I have the minimum requirement I need, this key line right here, and I'm up. And that's almost a full winner because this is a 4-unit Renko. Something just blew up here. Okay, my CQJC is just about to time out. It doesn't matter. Right here. So this is what we're looking for. We're looking for low risk, high reward trades in which all of the variables that we believe are responsible for the future movement of price on these markets are in our favor. Now, I'll just talk really quickly about crude. Now, the index equities have 9 correlative markets. Crude only has 3, and you'll remember there's no cash metric on crude. I mean, there's no cash market. So that first line can't be a cash line. So what we did was we simply took the 3 correlative markets and broke them into 3 speeds. That's one speed. This is another speed, and another speed. It's the same 3 markets. This is But that same line is your key speed right here. This line is a little slow, a little too slow. We wanted a slower assessment, and these two are faster. This one is perfect. This, and listen, if you have 1, 2, and 4, you're good to go. But if you have 3 alone, you're also really good to go. And on this trade up right here, I don't know how it was in real time. I'm not going to call a trade when it doesn't sit perfectly, but here's your perfect short trade right there. What you have to be careful of is you don't have background bias. And that's really important. And you're trading into support right here of yesterday's close. It's up to you, seeing the risk. You've got a revolutions entry. You've got a continuation entry, which means you have multi-time frame alignment on 2 other range time frames telling you this market's going to go. A lot of stuff here. The most important independent variables missing. Your correlative markets are calling the short. This is a great, these trades are gray zone trades. And if you want to take them on a reduced number of contracts, maybe 1 contract or 2, you can. I mean, it's all trade management. So I'm going to stop. I've gone an hour. I hope I've given you an idea of what we've done. We've really done a major upgrade. This 50 and this 15 are different. The correlative markets are different. Background biases at different speeds. We've optimized the system for the way the market is today. And maybe in 3 or 4 months, it'll be different. The point that I'm trying to make is that what we're trying to do is create a system that works in the present market environment. And this market environment is not going to last forever. And I just want to show you this last quick thing. This is a very helpful thing. Let's say you're not sure about taking this trade long right here. And I look for these all the time, and they're very helpful. And if I catch one and I see it, it's really, really helpful. This is why Renko and is so much better than Renko. I would never trade Renko. You get a lower shadow is a bear failure. Bears tried to push the market through support and failed, and it closed up. But let's say you're not sure about this trade. Remember, you only have 1 correlative market line, the top one. No cash line. You have dual dots. Forget about the color of the candle, because the charts have been opened and closed and opened. It's going to change this color. It's never going to change in a live market, but it is going to change when you close and open your charts. Can't help that. So what you do, if the trade runs straight up, you miss it. No big deal. There'll be other winners. But if you're lucky enough to get a second wick, now you've got 3 correlative markets in your direction. All 9 are in your direction here on this trade, and the bears have failed again. This is a dual bear failure. And on this second candle, you're in. It's a very, very strong signal that the bears cannot successfully pull this market through support. They failed twice. The bulls have pushed the market higher, and that it's going to break and run. And that's exactly what it does. It breaks and runs. The risk is you lose the trade. It just runs on that candle. But if you want to be conservative, wait for the second pullback. You don't have the correlative markets in your favor. You got a lot, not enough. Hope for a wick and blow it right up. But now let me see if there are any questions. I showed you the Dow. I'll just give you a quick look at, now these have to be re-optimized. Here's notes. We get great trades. These are swing trades on notes. It's $17.25 a tick. And you've got to sit in these trades. There's an entry right here. And you got to sit in these trades for an extended period of time, sometimes overnight. Just like that. Dual dots. Now here was your continuation signal, but this candle body is too small. It's a reversal. Just wait for the next entry. And down you go. And that's a very lucrative trade at $17.25 a tick. And you get these all the time, but you only get them when you have background bias and the quants. Here's another one. Dual dots, next candle, and down. Very hard to trade bonds and notes. This gives you great trades. Here's another entry right here and down. You just have to be prepared to sit. There's another entry and down. So you just got to wait. And you may go 2 or 3 days with no entry. And you may sit in one trade for a day and a half. But you get great trades. I won't rotate to bonds. It moves very similarly. And bonds is $31.25 a tick. You can get a 10-tick trade on bonds. You should be doing a dance because it's a really hard market to trade. Now, let me just show you our offer, and then I'll answer all the questions that you have. I'm not going to blow the slide up. Our discount is $1,399. Normally, it's $29.99. You get a lifetime license. Now, right now, we're active on crude, E-mini, Dow, Nasdaq, gold, DAX, bonds, and notes. You get all add-on markets. So you'll be getting the 6E, the 6A, the 6C, and 4X very, very soon. And when we do this optimization process and we change the indicators and we add the 15, you get all these upgrades and add-ons. You're never going to pay again for an upgrade of the system. And commonly, people will ask you for more money. We do not do that. You come aboard with a lifetime license and we don't ask you for another penny. As we re-optimize the system and we make it better, you're going to get that optimized system. You're not going to pay. We do it a lot. So you get a lot of updated packages. And right now, we're in a, we've just done a major upgrade. Now, if you're one of the first 5, you get 2 months in the trading room with me. And I'll tell you, it's going to help you. There's about 160 traders in the trading room. Everybody exchanges comments. You don't have to feel so lonely. You won't overtrade, which is the biggest problem. We've got some really awesome traders in there who yell at me if I overtrade. I get yelled at all the time. You also get a 10-module weekly educational training, which is really going to help you, and 450 videos going over this, the trading techniques and the indicator analysis, really until it's coming out your ears. And trading with me in the morning is really, really going to be helpful. Now, it expires on Sunday at midnight on the 30th, but only the first 5 get all these add-ons if you want to come into the room and go all this stuff. Now, after the trading is over, I usually do at least 45 minutes to an hour of teaching. I go over all the trades. I go over the entries we took, both winners and losers. Sometimes you get a winning trade that's not a great trade. Sometimes you take a losing trade that's a great trade. So we go over all the entries, and everybody asks me about this entry, that entry, this entry. Why didn't I take it? And it's just a nice exchange of ideas, and it really facilitates the learning process. Remember, this is a discretionary system. Some traders can take a trade that others won't, and they're both right. And that's what we discuss. Some trades are just absolute gimmies. If you don't take them, you got to retire from this business right here. And if you can't take that trade, you gotta find something else to do. But a lot of trades are gray zone trades. And those are the trades that we discuss. Now, if we get a couple of these hand me trades, and what this is, and I'll just describe it to you, this is nothing more than a break and test and continuation. That's all it is. This wick is price testing support, failing to break, and then continuing up. Those are very, very reliable patterns. They just have to happen quick. You break the 50, the 15, test the 15 right away, and then up. And on a pattern like that, this pivot is minuscule. It's going to snap. The bigger pivot is an issue, and that's a major pivot. And if you have time, you're going to squeeze the chart and look and see how many times it's hit. It's never hit, so it's going to be an issue. But you have some room. Just be prepared to abandon ship if this thing starts to turn at this pivot. The thing is, we know what we're doing, and we're going to be, after the entry, we're going to be up 4, 8, 12, about 16 ticks when we hit this pivot. And if it starts to come back, I'm just going to close the trade. So we're going to turn it into a winner, no matter what, if we have that much room. So that's it. So let me see if let me look at questions. Okay. Now the only other quick thing is it only works on NinjaTrader, but if you're on another platform, it's NinjaTrader, it's 7 or 8. If you're, let's say you're on Thinkorswim, Thinkorswim will power the platform, and you can take your trades in Thinkorswim off the signals from Ninja. E-Trade will power it. Interactive Brokers powers it. So you download a demo, you use your own data feed to power it. You don't pay an extra dime. It doesn't add to your cost of trading, but you're going to have to take the entries on your platform. It's a little more cumbersome, but it's definitely doable because we have a lot of people who do it. So let me just go to the top here. Very, very shortly, John. Okay, David. Yes, it does work on individual stocks, David. And let me tell you why. I don't have time to demonstrate on stocks, but every stock has individual relative strength. Obviously, if you're trying to take a short trade on Apple, like today, like we have Apple in our options portfolio. And I have 14 open positions in our options portfolio. I take all the options trades off this software on longer term time frames on much bigger Renko setups. And I'll tell you the close today. So you have to take into account somewhat relative strength, but irrespective of relative strength, when overall market internals start to point down, almost all stocks retreat. Not all of them, but the majority of them. So market internals are very, very, very helpful. Now, man, we had Electronic Arts fly today. A lot of things went up really far, but we had a couple take a dump. Apple was up $4.33. Obviously today it would have been a lot tougher, but if you look at a day chart of Apple, you'll see that it had significant ups and downs. And if you want to catch 50 or 60 cents on Apple, you can do it. So, I mean, my recommendation, and you can easily trade individual stocks. I'll show you an individual stock really quickly. I'm sure it'll interest everybody. Let me just, here are the cues. Now, I just have it on a very simple chart. I don't have all the data. And you can see how it adheres to our system. But let me put in a full chart. The problem is I don't have, you want to look at Tesla? We'll take a look at Tesla. I think I have it in here. It's right here. And for some reason, I'm not getting any data for Tesla. I don't know why. Let me try NVIDIA. Not getting any for NVIDIA. Hold on a minute. I know why. Give me 1 second. Let me fix the chart. I just don't want it to go on too long because people are going to fall asleep. But hang on 1 second here. All right, give it 1 second, and all these stocks will come up. I just had to connect my data feed. Remember, you saw it said was timing out. So let me reconnect. That's connecting now. It's waiting. It's waiting. It's waiting. Come on. Still hasn't connected. Here it goes. It just connected. So here it's loading. And I'm just going to give you a skeletal outlook because we have to. We're working on the quants for each individual basket of stocks, like Amazon, all the really expensive, the moderately expensives, and then the cheaper stocks. And I haven't been following Tesla, but we'll see where it's trading right here. And it's loading. It won't take that much longer. Now, I'm not going to be able to put the cash internal in here. I just want to give you just a quick look. And this is a 2-unit Renko. Way, way, way too fast for NVIDIA. And I'll move it to Tesla. Way too fast. I just want to give you I just want to let you take a look. Okay, it's loading. It's going to take a minute. I'm just gonna go continue on with the questions while the stock platform. Okay, here we go. So let me go to Tesla. Now these aren't gimmick trades. These aren't trading gaps, trading breakouts, trading my three favorite chart patterns. I used to be a garbage truck driver, and then I came across these 3 simple chart patterns, and now I'm a multimillionaire, and I'm going to teach you these 3 simple hacks. I get these on Facebook all the time. These are real bona fide trades, winning day trades that aren't gimmicky. And I know you can trade a bull flag, a bear flag pattern. You can trade a falling wedge or a rising wedge. I mean, I can teach those patterns to you easily. 70% of the time, those patterns fail. In these guys' books, they turned $100. That guy, I'm not going to tell you his name. He started with 100 and ended with 100,000. They all do it, and then they're going to teach you how to do it. I once made a comment in one of his webinars, and I'm never disrespectful. I said, if you could turn 100 into 100,000, why don't you take 100,000 and turn it into 100 million? And he booted me out of the room. But it was a reasonable question. If I could turn 100 into 100,000, I would have 100 million now, and I wouldn't be working. I mean, that's the honest truth. All right, we'll just wait for Tesla to load. It'll come up. Let me see if there are any other questions. Don't worry about it, Ken. It's recorded. John, it'll be available on NT8 within about a week and a half. Sergio's working on it now. And I am going to move to NT8. I am. Hey, Robert. We don't know yet, Robert. Robert asked me about the MA diff. I didn't go into that in the webinar. We're in the process of analyzing it and figuring it out because we just added that new modified 15. It's a brand new line. And that's a very important number, overbought, oversold number. We've got to review about 6 months of data for that. I'm not going to give you a number until we figure it out, but we will. Yep. Well, you know what, Robert? I'm going to create an ebook with the rules. But the trading rules are so simple that I don't know why Tesla's taking so long to load here. That if you watch one video, you really have almost all the trading rules. If you spend a week in the trading room, here's Tesla. You finally got it unlocked. Now, remember, you want to trade with background bias. And here's your short on Tesla, right here. Now I'm not looking at anything else. This is not a lot of data, but I just want you to get a feel for what you're going to see if you want to trade a stock. And there's your short. Now, how far down you get it is going to depend upon your automated trade management strategy. You have nothing here. Here's another short. It's a perfect trade. Short. Here's another trade. Short. Now, here's your pivot. It doesn't make it. And it might be, so here you have room. Here, this candle doesn't break it, but here's your tough trade. You have no room to the pivot. Now here's your trade. Very tough trade because you have a swing pivot, but you can take it. This is not a trade. You don't trade between this line and this line. No background bias. You're never going to get a winner in here. Just leave everything alone. There's your long trade on Tesla and up. There's your long trade on Tesla and up. No background bias. This is a winner that gets away. Who cares? This is just not a trade. It's right into the 15. No trade. There's your short trade on Tesla. Perfect. Here, no 3 line. Candle is not outlined in yellow. Doesn't go very far. Look at this trade on Tesla. Kaboom. Down. No background bias. Don't even touch it. There's your short trade. There's no 3 line. Halo. Don't trade it. So far, we haven't had a loser. Now here, we've got problems. We've got dual pivots. And I would just take this all out. Because here's your trade. Right down. That's a tough trade, actually. It's not a gimme. Now here's a good trade, and here's your first loser, right here. That's a trade I would take. It doesn't make it. See, the 15 is above the 50. You never trade short. Have to wait until that 15 crosses the 50. And look at this trade. Right to the pivot. I mean, you're just going to, honest to God, I mean, you're going to clean up today on Tesla. I mean, this is only between 1,400 hours. This is only between 2 o'clock in the afternoon and 4 o'clock in the afternoon. You have so many winners that I don't know what to tell you. So I mean, I kid you not. Now, all the other things we add, all they will do is serve to reinforce the validity of this short trade. You already have the order flow stochastic and momentum in your favor. You already have the multi-time frame alignment in your favor. You already have the 15 below the 50 in red. That's a lot. When you get the quants and you get the cash metric, I guarantee you they will simply tell you, yes, This is a great trade. Take the trade. Now, this blue is simply because I closed and opened the platform. I'm pretty sure it's yellow. Can't guarantee it. But even if it's not, just forget about it. This is going to be a short winner, not much. This is a pretty big winner. And you're just going to, this is a gigantic winner. Now, you get it. You're going to have background bias. I'm not manufacturing this because it's going to push over 2 candles. It's pushed to the right when you close and open. Nothing here, don't trade. Nothing here, don't trade. There's just no trade here. Can't get in. Now look at all this white. Look at all these signals. And they all are a mess. No multi-time frame alignment. You let the trade go. And now this is a tough short trade. Very tough. I don't know if you could get that trade in real time, but it's a potential short. I think you see what I'm talking about. This is how you successfully day trade stocks. You don't trade 3 simple chart patterns. You don't trade bull flags and bear flags. You trade order flow, stochastic, and momentum. You trade the multi-time frame alignment of trend. You trade correlative markets. You trade cash internals, and you're going to get yourself really nice trades. It doesn't matter the time frame. If you want to trade a 2-unit Renko, a fast chart, if you want to swing trade, you can trade a 10-unit Renko. And I hold my options from 6 weeks to 2 months. And I have 12 positions. And we are doing really well in our options portfolio. Last year, 78% of my trades were winners and 130 closed trades. So we made really good money today. If you want to swing trade, you can get great entries off of the software. Okay, Arthur, on the DAX, let me go back to it so I can give you an exact. It's a good question. And all you have to do is look at the open offset. It's 12 ticks. A 13th tick will give you a reversal. So you're going to have to take a 13 tick stop on the DAX. That's a very expensive stop at 12.5 euros per tick per contract and a 13 tick. The issue, though, is that if you trade the DAX, you should get very, very few losers. I mean, the DAX at 3 a.m. is a killer instrument, and it doesn't chop you out of a trade. Later in the afternoon, it starts getting whiffy. But at 3 a.m., all you need is 6 ticks to make 150 euros. 2 6-tick trades, and you're up 300 euros. I mean, I just can't get up at 3 a.m. If I could, this is all I would trade. I mean, I'm on the East Coast. I mean, if I lived in England, I would just trade the DAX. I wouldn't go near crude or any index equity like the Nasdaq. The DAX trades are too juicy. I just can't get up at 3 o'clock in the morning. I'm a single dad. I have to get up at 6 o'clock in the morning to make my son breakfast. It's just too much for me to get up at 3. So that's the problem with that. And also the problem with the DAX in the afternoon is that it moves like such wildfire. It'll blow through your entry. And I mean, I've gotten 5 and 6 ticks of slippage on the trade, or when I have a heart attack. I mean, it's gone through my first target, but with slippage, I still have 6 more ticks to go. So I need a 12-tick trade just to get my first target out. So, I mean, because volume is too thin and the DAX moves too fast. So it's just a losing proposition to trade at 9:30. And I would strongly dissuade anyone from trying to trade it during the day. It still makes great trades, but it's going to murder you on slippage because it's thin volume. but not at 3 a.m. Yes. No, Steve, it's not ready yet. Give us another few days and we'll be ready for the whole system upgrade. Okay, I'm reading, Warren. I got in late. What is your Renko bar set at? If you don't mind. No, not a problem. The NQ, the Renko, is at 10,420. And that's the same as the Dow, is at 10,420. Crude, and these are optimized, is a 5,210, which is the same as gold, which is a 5,210, and the same as the Russell, and the same as the DAX, and the E-mini is optimized as a 428. The perfect size candle for the E-mini. When you get any kind of volatility like we got today, got two awesome trades, 4 points and 9 points. You just need the volatility. Stocks are very variable. If you come aboard, you tell us what you want to trade, and you tell us the time frame you want to trade it, and we'll give you the setting for it. Because you may want to swing trade Nvidia. You may want to option trade Nvidia. You may want to take a 6-month vertical spread or a 2-week vertical spread. You have to tell us what your goals are, and we'll give you the candle settings. The targets on entry, Caesar, are all automatic. On the Nasdaq, and we're going to give you this information. You come aboard. I just want you to know we set everything up for you. You don't have to worry about tech stuff or anything. And we're one of the few companies that do this. We just don't give you the software. We give you our recommended entries. On the Nasdaq, first target is 20 ticks. Second target is 30 ticks. If you trade 3 contracts like I do, I take 2 off. Target 1, 1 off. Target 2. 30 ticks, I'm out. And I've made 70 ticks on the trade, and my maximum loss is 75. So I'm real happy. And you get 30 ticks on the Nasdaq easy. It's not that hard. Now we have one for each market, and we'll program that for you. All you've got to do is tell Sergio how many contracts you want to trade. If you want to trade 2, you're going to take 1 off at target 1 and 1 off at target 2. If you want to trade 1, you're going to take 1 off at target 1. I don't recommend it, but based on that, we have the automated trade management. You just leave it alone. Let the trade evolve on the automated trade management program that's already been programmed in. Today's okay. Okay, you're welcome. You're welcome. Nice, Ford. That's very nice. Jonathan, we don't have it yet. It's going to be available very shortly, and you're going to get it. Don't worry about it. Sir Rory will make sure everyone who has the older version gets the upgrade. Yeah, it will work on stocks. Yes, it completely replaces our older version, Caesar. The older version is not optimal in this trading environment. This is why we have changed. And maybe in a year, this won't work, and we'll optimize again. When you're into mathematical modeling, you understand that no single piece of software is going to work forever, because the market environment doesn't stay static. It changes. And as it changes, you have to flex. And that's what we do. This was a huge upgrade for us. It was very time consuming. And if you own the software, You get these upgrades. I mean, I've had people for 5 years who bought my first version that have been upgraded about 15,000 times. And that's the way you trade the market profitably. You don't sit there with one system in a completely different market setting. Very nice. That's a good question, Cross. For background, short, I'll give you background long and short, both. Well, for long, most powerful, dark green. For short, most powerful, dark pink. Those are your prime trading scenarios. Most powerful. The second most powerful long, you don't see it often. When I look for it, I never find it, but it's here. Is cyan or magenta. I always get those colors mixed up, a mental block. That's the second most powerful up. And teal, or this isn't teal, this is bisque, is your second most powerful down. And then the weakest down is light pink. And the weakest up is light blue. Now, it still gives you an absolute trading direction. Why? Because when you're light blue, you're above the 50, price is above the 15 and above the 50, and above the 15 on both higher time frames. So in order to take a short, you've got to break 1 ton of support. You need to get a counter trend, a successful reversal in direction. So you have to take a long trade, but this is going to be the weakest long trade on this light blue or light pink, but it's still advantageous to trade long. It's the only direction you can go is long. And what's happened in this color is our 15, we use a special 15, it is flattened out and turned yellow. So we're not in a strong uptrend anymore, but the only direction we can take is long. This green color, you can see if we're not assessing price on our trading chart here, this is a very powerful direction to trade. And it's very, very rare on dark pink. You're not going to get a beautiful move down. Now it moves through a lighter stage and then comes back to the strongest pink. And you're not going to be the trader. I don't want to be this, who's going to be in this candle and this candle. No one's going to teach you to do this ever. And I'm telling you, there are people who will. Off a trading channel, off a Bollinger Band, who the heck knows? Somebody's doing it, and there's got to be a lot of buyers in here to turn this market. That's a 25 tick move up to get a reversal candle. The 25th tick creates the up candle. So that is not a small pull back to the 50. We're never going to be in there. We're going to leverage, we're going to exploit them, because when this move continues down, it's going to stop them all out. Push it down. In the room, I trade Nasdaq and crude. We usually get great opportunities on both. Stops, Ronald, depend on the size of the candle. On this candle, on the NQ, a reversal candle occurs on the 25th tick. Our stop is at 25 ticks, and it trails the whole trade by 25. Now, usually what I do is, because I'm a chicken and I want to protect my profit, when I hit 20 ticks, I just move my target. I just move my trailer to break even. Now, it should be at -5, but if it comes all the way back, I don't want to give anything away. So I just pull the stop a little bit tighter. But it's on a trailing stop. That's all it is. Now it's smaller on crude because crude, the reversal candle is 13. So it's 12 to 13. So you're going to have a 13 tick stop. But I'm also kind of chicken on crude. Now, sometimes I squeeze the trades out, but I bring that stop tighter when I get my first target out. I just don't like to risk any money. If I hit my first target, I don't want to give anything back to the market. But if you let the trade alone, you're going to be on a 13 tick trailer and on a 25 tick trailer. That's our recommendation. We'll program it any way you like. Depends on the number of contracts, Ted. 25 per contract on the NQ, 13 ticks per contract on crude. But we're looking to make, so 3 contracts, 75 ticks at risk. But we're looking to make 70. So we're about 1-to-1. You're not going to do better on a leveraged instrument like futures. On stocks, you get 5-to-1, 6-to-1, because it's not a leveraged instrument. But on leveraged instruments like this, let me just say one other thing. Their automatic trade management strategy is based on the average true range of the instrument. We could set a second target for 50 ticks, but we're never going to get there. We want to set a second target of 30 because we commonly get 30. And it's just based on math. You can't set a trade management strategy on what you like. And I always hear people saying, well, I want 2-to-1, I want 3-to-1, I want 4-to-1. Well, you can want what you want, but you're only going to get what the market will give you. And the market's only going to give you a run based on its average true range. Now, sometimes it's going to run further and sometimes not as far. But on average, you've got a great shot of getting 30 ticks on a trade. And that's what matters. To get your full winner, make your $350 on your Nasdaq trade, make your 350 euros on your DAX trade, or $350 on your crude trade. And if that's your target, you're done. If you want to take another trade, you go for $600 or $500. Future enhancement, Vincent, are the auto trader. The revolutions indicator being absolutely perfect right here. So that when you get a revo, it's going to look at every single independent variable I discussed, all the quants, the cash metric, the background bias, the space between the 50 and the 15, everything. I mean, that's what's coming next. If I give Sergio, who's our tech guy, any more stuff to do, the guy's, his hair's all going to fall out. It's falling out now. He's only like 35. I can't give him more stuff to do. That's because, Jonathan, we don't have the update ready. I promise you, you're going to get it. You're entitled to it. Trust me, you're going to get it. I'm sorry if you fell off. I'll talk to Rory. You should be on our list. What we do is, Steve, Rory has a Excel spreadsheet of all our software owners. And we send you an email, and then we send you the package. Now, Jonathan, apparently we missed, but Jonathan's going to get the upgrade. You should be notified and get the upgrade. You don't have to keep tuning into us. Ted, you can trade one contract. And you're going to look for one target. And it depends on the instrument. On the Nasdaq, you're going to look for 20 ticks on one contract. So you're taking 25 ticks of risk to make 20. That's a pretty equitable risk to reward. And the consideration is that a very high percentage of your trades are going to make that 20. So the total positive predictive value of the trade is going to swing things way in your favor. So That's the way I would look at it. Thank you so much, Phil. You're really kind. Okay. Okay, Pat Hare. Okay. Oh, Mohammed, if you want to trade stocks, okay. I thank you guys. Thank you. Let me tell you, Advanced Micro Devices will be a great stock to trade on this. Okay, everyone. The new quants for DAX, Al, we don't have them out yet. Exactly the same as crude. You're going to look for the key line here, and then any additional lines will help you significantly. You're not going to want to trade without this line. And if you want to just trade the DAX, since we don't trade it in the room, I'll work with you on the DAX. The DAX is a superlative instrument. If you can get up at 3 Eastern Daylight, 2 o'clock Eastern Standard, you're going to get absolutely incredibly good trades. And you're going to lose very few. And I don't want to go back and extend this time out, almost on 2 hours. These trades are really superlative. And like I said, if I could get up at 3, I would trade the DAX and that'd be it. Only half the people in the room can't get up either. So it's very hard. Thank you. You know what, Mick? We're going to optimize platinum and gasoline. I'm not going to trade it in the room. That's going to be in our next round. A lot of people want natural gas, gasoline. I've had multiple requests for platinum. We're going to optimize them, and we'll have the platform available for you to trade. Only I'm going to stay with the NQ and crude. If I was faster, and today I missed a trade because I picked up my mouse and dropped it. If I was younger and a little more nimble, maybe I could trade 3 markets. But there's so many nice winners on these 2. I don't need a third. But if that's what you like, we're going to have those markets out, and you're going to get them. Let me see, Vincent. We're trying, Vincent. We're moving, Jonathan. That's part of what Sergio's working on now. He's on the revolutions indicator right now, putting it on 7 and 8 on about 6 markets. Yes, you do. Yep, Caesar, you get 100% of what you paid for the 3 line as a subtraction for this. We always do that. So you're going to get that reduction in price. Now the 1,399 is a temporary price, but you're going to be able to subtract off what you paid for the 3 line. Yes. You just have to call us and we'll send you a special link. And it's not a problem. We do that routinely. Like I said, we don't want to gouge you. We really don't. And I really appreciate your confidence in us. Thank you, Ted. Thank you, Vincent. Thank you, Vincent. I appreciate that. Now, Caesar, they're a little bit busy, but I'm telling you, everything has a purpose. And once you get a little bit of time with it, you're going to see it's very easy to trade. It really is. I never have trouble making an assessment because there's too many colors and stuff. None of these change that much. It's really not a hard program to follow, really. Khalid, we're going to work on these alerts. We've had so many people request alerts on different stuff. Once Sergio frees up some time, we'll make about 6 alerts, and we'll include your alerts. We're going to work on them. You two have a nice evening. No, Ted, we always enter with a buy stop or a sell stop because we're going to look to go long right here. when the candle's about half full, half created. So let's say price is here. We know we want to take the trade on the close of the candle, and our entry is one tick above. Now, if you look at the right edge, you're going to see that we have this range maker. This already tells you where the candle is going to close. This candle on the Nasdaq is going to close at 65.25. If you want to take a long trade, you're going to put your buy stop in at 65.50, and you just let it sit there. If the candle doesn't come up to take your order and then recedes and maybe reverses, you just cancel your trade. So you're going to put in a buy stop or a sell stop, and another kiss of death is trading intra-candle. Cannot trade intra-candle. Got to wait for the candle close and then buy one tick above on a short, buy one tick below. Thank you, Caesar. My pleasure, Caesar. Come on. Thank you, Khalid. The full automation is not available yet. We're going to have it available soon, Satvir. I mean, I don't want to mislead you. It's a major priority for us. And we are not that far away, but the full automation is coming very soon. Okay, Caesar, great. He's here if you want to grab him. No, it's not, Ted. You're usually going to get every entry. The reason is I call them fast. And remember, this is a big trade. This is a long trade. This is a 25 tick candle. Now, listen, some markets, in some instances, if some news comes out and the market just fires like a rocket ship, nobody gets the trade. Absolutely nobody. And that's going to happen sometimes. But in a normal market environment, and listen, I take these trades live in real time in the room with Chart Trader up. My targets and stops are displayed, and I'm slow as molasses. If I can get the order in, you can get the order in. If I have my sell stop sitting there, you should have yours sitting there. So I don't just call a number and then leave it up to you. I actually take the trade. Ronald, just send us an email and we'll make sure that you get it. Okay? I'm sorry about that. It should have had it. And we will include it, Ronald. So you should get into the trades, Ted. I'm being honest with you. I'm taking them in real time. I'm taking them live. I'm not just yelling them out so that you have, a millisecond to grab the trade. If I can't get the trade and it works, I don't book it as a winner. It's got to show up on my dome. So I have to be in, it has to be executed. So if I can do it, I know you can do it because I am not fast. Okay. All right, everyone. Thank you so much for your time. It'll be recorded. We'll send it out to you. I don't know how many people want to listen to this 2 hours over again, but if there's little pieces of it that may be of interest to you, you'll have it. And I hope to see you in the trading room. My goal is to make traders money. It really is. And I don't sleep that very well if I don't have a good session. So be prepared to wait for the juicy trades. And when they come, we're going to jump on them. So have a great evening. And I wish everybody nothing but the best of luck. Take care all. Thank you, Satvir. All of you have a really, really great evening. Bye-bye.